All right, good evening, everybody. We are back with Friday Night Forex and Chill. Some of you know we did this for like 2 years nonstop every Friday night, and we got to a point to where we took a break for a while, and now we come back periodically every 2 or 3 months or so to hang out on Friday night to drop some free education. Help people that might be at a standstill in their trading career, help people who are looking for some aha moments in their trading career, or just to hang out with fellow traders. And maybe you're on here and you're new and you don't know a lot about Forex, but you're here to learn about Forex. Everybody's got different skill levels. Everybody's got different concepts they like to trade. Everybody trades different ways, And I tell people when it comes to trading Forex, you have to find what you can be consistently good at. Like a lot of new traders, when I first started, I was jumping from strategy to strategy, from educator to educator, trying to learn this, trying to learn that. And I got confused. It gets very confusing when you jump around from person to person. It's like trying to learn French this week, then Spanish next week, then Italian the week after that, and German the week after that. And you're just confused. You have no idea what's going on around you. You just confuse yourself, and then you get frustrated and you give up, and you're like, well, this isn't going to work. So you just give up and you walk away. And I've seen that happen with a lot of traders. They've gotten here and they would see somebody dropping dollar signs, how much money they made this week. You see the huge dollar signs coming across your timeline on social media, and you get attracted to the dollar signs. So a lot of people get attracted to the dollar signs and they forget about a skill set. So when you focus on this, you lose focus of this. But when you focus on this comes right along with it, okay? So tonight we're going to talk about market structure. We're going to talk about smart money. We're going to talk about a few things that when I got the proper education, I found out that I had been taught wrong, and I saw hundreds, if not thousands, of other traders being taught these things wrong or inadequately. I'm going to push my door together a little bit. One of my granddaughters is here with me tonight hanging out, and she's watching My Little Pony in the next room. So I used to apologize, try and get the kids to be quiet. But then I thought about it, traders are real. We're real people with real lives. We got kids, we got spouses, we got jobs, we got pets. So, there's no need to hide reality. If she comes in here and talks, we'll just say hello to Sky and we'll keep on rolling. But first of all, I want to thank each and every one of you for jumping on here tonight. We're almost at 100, but guess what? I upped the room to 500 for tonight. That way, the last time we had 100 people got on and some people couldn't get on. So the first thing I want to do is see where everyone is. And Grant is letting me know that I am not sharing my screen. So I am so sorry. So Grant, you got to keep me on track tonight. It's been a while since I had to do this. I'm now a full-time educator with a platform. We're not here to promote that platform or to promote anything paid tonight. Everything tonight is about free education and free value and giving back to the community. When I first started learning about market structure, I got plugged into a free community that taught me a lot and helped me take my trading to the next level. And when I mastered what I was being taught there, then I looked for further knowledge. So tonight, we're going to start with market structure, and we're going to move our way into smart money. Then we're going to move our way into risk management, because from what I've found and from what I've seen with the traders in our circle, when we combine those three concepts together in the right way, it produces six-figure traders. It produces funded traders. It produces consistent traders. So we're not here to be a jack of all trades, master of none. We're going to work on mastering market structure. We're going to work on mastering those smart money concepts that help you get those tight entries and understand liquidity and where the market is going. And we're going to work on that risk management, because without proper risk management, no matter how good you are as a trader, you're going to blow your account. So you might ask, well, how does that happen? Well, let me give you an example. You can have a trader who wins 9 out of 10 times. But on that 10th trade, if they don't use proper risk management and proper trade management, it can come deplete all the profits that they made from those 9 trades. And I was that trader before because nobody had taught me about proper trade management and risk management. So we will definitely get into that tonight, because this right here is what helped me cross the bridge from being a damn good trader that was blowing accounts to a damn good trader that was getting funded, that was getting other people funded, that was helping people hit 6 figures, that was helping people become consistent. I could chart and call trades all day long. I would win 9 out of 10 trades, but on that 10th trade, guess what? I would get the money back because nobody had taught me proper risk management, proper trade management, proper mindset. Okay. So there might be some of you out there that's in that same situation. So we won't talk about that anymore. We're going to move on, and we're going to let the money coach bring you into that portion. So I'm telling you, if you are trading and you're hitting a lot of your trades, but you're not making money and you're not consistently profitable, if you're winning 8 out of 10, but still at the end of the week, you can't make a withdrawal, you have to stay on until the end of this call, because that is the most important part of being a successful trader, is your trade management and risk management. So the first thing I want to talk about are some of the concepts that were taught wrong. Okay. One of the worst things that I was ever taught is that when you get a break of a trend line, that you get a reversal in the market. Okay. People teach us, and I see it still being taught, that when a trend line breaks, that the market is reversing. Let me make my trend line a little bit bigger here so you guys can see this. One of the worst things you can be taught is that when that trend line breaks, is that you have a reversal in the market. Okay. Why did it not make that bigger? All right, there we go. We got it going now. All right, so we got a trend line. The way I was taught and the way I've see a lot of people taught, okay, is the market is making higher highs and higher lows, and your trend line gets broken. Okay, so now people start looking for a retest and sell. That is one of the most dangerous things being taught in the market, because there's this thing called a break of structure, where when that market is making higher highs and higher lows, that as long as that previous low is maintained, I don't care if this trend line is broken, the market is still on an uptrend and it's going to take you higher. I've seen so many people lose money to the market because of that concept. I lost money to the market because of that concept. So when the market is making higher highs and higher lows and it's on an uptrend, it can break that trend line. But if it doesn't break that last push to the upside, it's this fancy little thing called a complex pullback. Okay. So let me look where my handy dandy guide went over here. Let me turn on my mouse highlighter. I forgot I had installed that, so you guys can see where my mouse is going. Okay, over here to the top right, it says complex consolidation. We call it a complex pullback. But see, if you were a trend line trader, when that broke, you would think the market was in a downtrend. But you see, here was your last higher low and higher high. The market just made a complex pullback and then continue going. This pattern right here, I've seen blow a lot of accounts. It is a very dangerous pattern, but if you learn how to trade it, you can make a lot of money. In fact, this pattern is why I had a big 5-figure week with gold this week, and I'll show you that on the charts. It was a bearish complex pullback, and a lot of people thought gold was still buying, but when it pulled back to my area of liquidity, and I'll show you that tonight, I sniped that sell. And people who follow me and people who are on the educational platform, they'll tell you for weeks, I've been telling them when this thing gets here, we're looking to sell, and that played out. So again, a lot of people do not know about the complex pullback because they're being taught to trade on trend line breaks. So let's go back over here. So, and it's going to be the same thing when the market is on a downtrend. And I promise you, if you're advanced, stick with me. We are going to get to the good stuff. So on a downtrend, and this is what gold was doing. Gold was on a downtrend. And it broke up into a complex pullback and then kept going shorter. So on the lower time frame, it was buying up, like on the 4 hour and 1 hour. But on that higher time frame, this was your push, your high, and this was your low. And in between this high and this low, this is your external structure at the top and the bottom, anything above and anything below. But you had internal structure where now you had higher highs and higher lows being created, and it was maintaining the magical trend line that people fall trapped to, thinking that's telling them where is the market going. So now they think it's in an uptrend where the whole time this push here to here is what really counted. Okay, so let me clear the chart real quick. So that's number one, is people trust trend lines too much. They don't know what a true break of structure is. And when a trend line breaks, they think the market has reversed. Okay, people don't know about the complex pullback. They think the market has reversed and they don't know where to get out. Number three, people confuse an engulfing candle with an order block. All order blocks are not engulfed. People think supply and demand are the exact same thing as an order block. That is not true. A supply and demand is an entire zone. An order block helps you isolate price down to one specific candle and get much tighter entries, much tighter stop losses, which allows you to have bigger lot sizes and make more money on the same trade as someone who traded just trading off that supply and demand zone. Now you've isolated it down to a specific candle, and people are being taught incorrectly about imbalances and gaps and liquidity in the market. And those are some of the things that we want to clear up tonight before we move on to the risk management portion. Okay, so the first thing that I do is I mark my chart up according to market structure. So I go on my higher time frame and I look for my swing high and my swing low. So I'll go on my monthly and find my swing high and my swing low. Then I'll go down to my weekly and I'll find a trend. Then I'll go down to my daily and I'll start identifying liquidity in the market, like order blocks, imbalances, where there was previous breaks of structure. Okay. So on my higher time frame, I'm looking for my bias. Is the market in an uptrend? Is the market in a downtrend? Is the market consolidating? Is it making a complex pullback? So once I assess my higher time frames, when I go down to my lower time frame, I'm no longer confused because I know exactly what I'm looking for because I've got my bias off of my higher time frame. And now I'm looking for my target entries on my lower time frame. That way, if I know this market is in an uptrend, okay, I said this is the daily that I'm getting ready to mark out. So the daily pushes up, leaves an imbalance, comes and taps into it. It's making a complex pullback because on your 4 hour and 1 hour, it is selling. The daily starts pushing up again and does the same thing. Can I get some sales? Yes, I can. But I need to know in the back of my mind, and I need to have alerts on my chart to my higher time frame zones that are going to cause this market to come push up again. I need to know if this has been mitigated or if there's liquidity sitting there, because if it's been mitigated and there's no liquidity and there's liquidity sitting above, then I'm probably just going to get a little bit of consolidation and it's going to run that liquidity. All right, we saw this last week on GBP USD. I was telling people for weeks, do not sell GU. But there were people out there that were selling GU. So let's take a look at that and I'll give you an example. All right. Let me find the right chart. You guys ignore my charts. I have stuff everywhere. Okay. Because I do teach a lot throughout the week, and I do markup charts a lot. So let's cut this chart off and we're going to talk about this. When this market was right here, there were people who have been taught about engulfing candles, and it means that when the market gets there, it's going to buy or it's going to sell. What they haven't been taught properly is about liquidity and the pull of liquidity and how the market is moved by liquidity, and about a true break of structure and about high probability trades. There's so much that goes into this. So you can't trade just because price came to where there was an engulfing candle, or price came to where there was a supply zone or a demand zone. So I sat here and painfully watched people selling GU. Meanwhile, I'm teaching for weeks. When it gets here, don't sell. There's liquidity sitting above that. You have liquidity right here and liquidity right here that needs to be grabbed. Did I anticipate this buy up? Yes. Did I take this buy up? Yes. Why? Because it came into an area of liquidity on the lower time frame, gave a break of structure and a retest. And I know that when the market starts moving, it's playing connect the dots. And where's it connecting the dots to? Well, the dots are in the liquidity. So just think about when we were kids and we were in school and we learned how to write our alphabet. Let's just say that the teacher was going to teach us how to make an S, okay? They would give us a piece of paper here, and it would have dots like this. And we would get our little pencil, and we would come and connect the dots, and it would form a pattern. Well, this pattern happened to be the letter S. Well, that's the exact same thing the market does. The market is leaving dots in the market. It's dots, I call them liquidity, okay? So what we do, market structure comes back and it connects the dots, okay? So when market is on an uptrend, you got your swing high and your swing low. Let's start with our low down here. So when an uptrend, it's leaving dots, okay? When it starts making that complex pullback, it's coming in and connecting the dots and hitting that liquidity, and it's making a pattern on its way down. When it gets to that last whip of liquidity, then it creates that higher high. I don't know if this is making sense to everybody. If this is making sense, let me know in the chat. So people are like, well, you trade smart money. How are you using trend lines? How are you using patterns? And it's because I've learned how to marry the two. I've learned how to master market structure, but also recognize the liquidity that's in the market. And it's what took my trading to another level, because you will get people who trade smart money, and you'll get people who trade structure, and they'll argue all day long instead of getting along and putting the two concepts together and getting to that next power level. Audrey, I'm going to get to liquidity before we get off here tonight. But before finding liquidity, you need to master market structure. And that's why people really need to learn what is a true break of structure. I'm glad you asked that question, because I saw some people arguing about AUD USD in a chat that I'm in, okay? You have this one guy, excuse my French, but he was hell-bent that all USD was in an uptrend. And I'm like, bruh, this is a complex pullback. When it swoops this liquidity, if it breaks structure, it's going to keep selling off. If it doesn't sell from here, it's going to go to the next liquidity level and keep selling off, because he was not familiar with a complex pullback. All he knew that it was making a low and a high, higher low, a higher high, higher low, a higher high. So he was confused, because this is your high, this is your low. Until this gets taken out or this gets taken out, everything here is internal structure. External structure, external structure. Anything that happens in here does not matter. It's nothing. It's nothing. It's just consolidating. It's grabbing liquidity. It's making patterns on the lower time frame. But when it comes to overall structure, it is not a higher high and it is not a higher low. It's not a lower high or a lower low. Now, what will happen is And let me start using this, okay? So now you got a high and you got a low. If this high breaks this low, this officially becomes a lower high, okay? Only if it breaks this, and right now it has not. It went under there and grabbed a little bit of liquidity, but it did not break it. Only if this gets broken will this become a lower high. Is this making sense? Yes or no? Is this helping you? Yes or no? Okay, because that's the one thing that I've seen bust a lot of heads. So people were sitting here when it made this low, high, higher low, higher high, higher low, higher high on a lower time frame. When it came back here, they started buying, and guess what? Boom. But why did the market sell off there? All right. When the market has taken the liquidity that it's seeking, okay, the first thing smart money will do is take liquidity to the upside before they sell off, okay? They'll take liquidity to the downside before they buy up. So if the market makers want to sell, they're going to run out all the buyers first. So they took out the buyers right here by faking them out. Let me zoom in on that so you can see it, okay? And in fact, let me hide the drawings on here and make this a little bit more visual for you guys. So we're going to focus on this zone. So here was your high, and this was a low. These little green candles in here was just consolidation or little flags on the lower time frame. But for this time frame, this was your entire impulsive move. This right here was a complex pullback or a bearish flag, whatever you want to call it, okay? And we're going to look at some types of liquidity. Let me pull that up on the screen. Because if the market wants to sell down, the first thing they're going to do is grab that buy side liquidity. So how do we identify liquidity? These right here, and I'm going to make it a little bit bigger, are your types of liquidity. In fact, I'm going to go over and get a clean chart so we can do it here. All right, we are on the daily. Let's pull up that types of liquidity again. And we're going to make it bigger so you guys can see. All right. So let's identify the types of liquidity that were here before the market sold off. So they look for equal highs and equal lows. If you go right here before this market sold off, you had some nice, clean, equal highs. Okay, you also had an institutional candle, also known as an order block. Okay, let's highlight that. Shout out to ICT. These are his concepts. This is nothing that I've discovered or I've created, but I did learn these things by following his teaching. All right. You also look for a daily high or a daily low. So right here, it had created a daily high. So let's make a little check mark there. I said little and it comes out big. So you had a daily high. All right, so let's mark this out. We had our equal highs, we had an order block, we got our daily highs. Now they're looking for buy stops and sell stops. Well, the way that we are taught to trade is that, oh, look, it sold off here. The last time it was here, it's a supply zone. So you got people who have sell stops. So they'll put in their sell stops and they'll have stop losses above the sell stops. Then you have your breakout traders who have buy stops up here and stop losses under here. You also have imbalance that was created. So everything on this checklist is here. What does that tell me? That tells me there's a shitload of money there, guys. And what moves the market? The market is moved by money. Okay. There's a lot of money sitting right there. Okay. Their number one rule is to take money to make money. So let's slow this down just a little bit. So we got people who have sold because you got a break and a retest on a lower time frame. If you don't see it, let's go look at that. Boom, there you go. You got your break and your retest, right? So we're making money, right? So let's speed this up a little bit. So it's coming back up. We're going to snag another entry. What did they do? They took out every form of liquidity we just talked about. So now on this time frame, people see this as a break of structure and a higher high, right? But the whole time, daily structure was maintained, daily structure was respected, and the market sold off. Okay, first place it goes to is this order block. Okay, if an order block is a candle that got engulfed, then why the heck is this candle considered an order block, this black candle here? Because an order block is not a candle that got engulfed. An order block, if you're looking to go to the buy side, is the last down closed candle before price breaks aggressively and trades away. So this black candle was your order block. That's where your liquidity was. Now this order block has been mitigated, okay? And if we look right below that order block, guess what was sitting underneath it? Another order block that got tapped into, okay? Now, you might ask yourself, well, if this was an order block, why did the market come after this one? If you look at this order block, it didn't create a higher high. If you look at this order block, it created a break of structure and a higher high. When this order block got mitigated right here, it didn't come into 50% of this order block. So this came in, mitigated that order block. So this is the money they were after. They were after the money over here because this right here was just a reaction to this. A high probability order block. Let's take a look at some of the characteristics of a high probability order block. Okay. You'll see I have templates for a lot of stuff. And I tell everybody, I'm like, you know, you got to give it a test. You have to test the order block and see, is it high probability? All right. So here are some of the rules we look for in a high probability order block. Did it create a break of structure? Okay. This one did. This one did not. Did it leave imbalance? They both did. Okay. Did it take out an opposing order block? It respected it, grabbed a little bit of liquidity, but this one here took out this order block. So there's where your money was, right here, okay? There was more money in this smaller order block than there was in this order block that had a reaction off of this, but didn't fully mitigate it. All right, to be mitigated, a good mitigation is when it taps into at least 50% of the order block, okay? So is this making sense to everybody? All right, is this making sense to everybody? And I'm trying to teach a lot in a little bit of time because it is Friday night and I wanted to cover market structure and smart money. So you see how this is combining the two. We're looking for those break of structures. We're looking for those retests. But what's going to be tested? What's going to be retested? That's where the liquidity comes in. Well, GG, how did you know that on that GU, that zone was not going to get respected? Okay. Because when they're doing liquidity runs, if you got back-to-back liquidity, that's like a double whammy. When you got liquidity stacked on liquidity, why not take it all? And then you had structure, okay? You got people who trade off trend lines. If you draw the peaks, it taps into that trend line. They're automatically selling here, okay? So it ran the trend line by about 60 pips. The standard stop losses for retail traders are 30 to 50 pips. So they took out the stop losses of the people who automatically sold here. A lot of times you will see a stop loss, a trend line get broken, and it'll run into an order block and then pull back within the trend line. That's one of the first things I noticed. Even before I didn't know what an order block was, I had noticed this, that when the market was selling off, and I didn't know what the complex pullback was either, that when the market was selling off, sometimes it would break the trend line, but it would go where there was an engulfing candle or a demand zone or supply zone there, and then continue down. And again, that was before I learned about the complex pullback. That was before I learned about the order blocks and the liquidity. And it all started making sense. I'm like, you know what, guys, we keep getting our heads busted when these trend lines break. But I've noticed when they break, they go back to that previous zone, then start selling off. So what we need to do is move our trend line over, because trend hasn't really been broken. And I had no idea what I was catching on to, because the more you chart, the more you train your eyes. You have a reticular activating system in your brain. The more you see something, the more you remember it in the future. It's like, you know, when you have those aha moments and stuff clicks, it's because you've seen it so many times, and that it's ingrained in the back of your brain, that it finally comes to the forefront and it makes sense. It's like when you solve a problem that you've been looking at forever, and then, oh my God, that makes sense. And that's what happens. The more you chart, the more your eyes see, and you start memorizing these patterns, you start memorizing these behaviors. And in the future, when you see it again, it makes sense. And you start figuring out what the market is doing and why. So let's just mark up a chart from scratch, and we will incorporate these things, okay? So we're gonna first go to structure and see what overall structure is. Then we're gonna go look for our high probability zones. So the first thing we want to do is look at the monthly, because every single time frame counts. When you're looking at the monthly on a chart, it's like an aerial view. So just imagine this is a big playing field, and you're on an airplane, you're flying over, and you can see everything that's happening. The monthly gives you an overall view of what's happening. And little secret, the monthly and weekly, that's the playing ground for the institutional traders. They very seldom, I'm talking about the people who can move the market a pip, because one pip is usually about $1 billion in the market, okay? You know, people will say, well, I'm an institutional trader. No, you trade institutional concepts, but you are not an institutional trader, because I doubt you have enough money to move the market a pip, which is about $1 billion, because we got $6.6 trillion a day moving in the market. Now, when you get to where you can move the market a pip, I'm going to be highly impressed. Can you do it? Yes, you can. I believe everybody on here has that potential. You just got to get in these charts and put in the work. So on the monthly, the only thing I am concerned about is giving myself a trading range, because when big money moves the market, they move it in ranges. So I'm looking for the most recent high and the most recent low. So a lot of people will come here and they'll put this right here where I'm clicking as the high. But going back to what we learned earlier tonight, this cannot be our high, because it didn't take out the previous high, okay? In fact, it came into that high, which on the monthly is an order block, okay? So this is our trading range on the monthly, because price on the monthly is still making lower highs and lower lows. Until this gets broken, odd on the monthly is still in a consolidative pattern in a downtrend, because it has not taken out that previous high that caused this break of structure. So when this price traded down, it took out this low, which made this a lower high and this a lower low. So price is coming up. So all of this is really nothing on this time frame. This would have to break this to officiate it as a high, or it would have to break this to officiate it as a low. All right. So you have to excuse my granddaughter. She's in here grabbing some toys to go into the next room. So let me get this off. So the only thing you really need to focus on is your trading range. Okay. If you see your high and your low, and also you notice that this bearish order block, which is this green candle, maintains structure. You see how price tapped right into this order block. Okay. If you were a smart money trader, an institutional trader that actually runs the market, when price came into this, you would have been putting your sell positions. I'm just going to highlight it, even though we don't need it on the lower time frames, but look at that. The last up close candle before price made an aggressive sell-off and break of structure. This is your true order block. This is what they were after. From the moment they bought, from the bottom down here, they knew exactly where they were going. They knew where they were going to close these markets. They knew, I mean, these trades, because right here, these people that were selling, this green candle is where they started their sell positions. Because if you want to make money, you want to drive price higher, get it at a high rate, and then sell it off. So they'll pump about $20 million into the buy, and then they'll throw $80 million into the sell, break structure, do a complex pullback, come back, mitigate that $20 million, take their money out of the market, and boom, an aggressive rejection at that zone. And that is what happened on your monthly. Okay. And again, we don't need to know all that. It's good to know, but you can make money without it. I'm a nerd. I like to know this stuff. I like to know why the market is doing what it's doing, so I can be prepared to get in or get out with them. You have to start thinking like the bank. So what were people doing? They were like, oh, it's on an uptrend, because on your lower time frame, on your weekly, you were getting a good solid push. Okay. So on the weekly, I try to make myself a nice trend line to see the momentum in the market. Okay. And you see the higher and straighter your trend line goes, the stronger the momentum. Okay. Now let's look left again. What happened again? Again, we had an institutional candle, which is another confirmation that there was a strong presence of sellers, because the sellers bought the market to trade it off. So we did have a nice strong uptrend here on the weekly. And to tell you the truth, this is your low way down here. Okay. And this is your high way up here at the top. My little marker is not working, because you had a small area of consolidation, but you didn't have a break of structure. Okay. If it doesn't break like that 23 on the fib, it's just a consolidation. It's just a pause in the market. Okay. So this was like a big push, and now it's creating that complex pullback, because on the lower time frame it's selling, but here on the weekly it's still bullish, but now your buyers have closed positions and they are mitigating some of the price, some of the imbalance they left there. So how would you have traded this to catch the sell? Okay. Number one, you had an order block on a monthly and a weekly, which means this is very high probability. There's a lot of liquidity there. And when they got this into this market, they closed out their positions, which is why you have this choppy price action coming back down. They didn't aggressively sell the market off. They just mitigated where they buy to sell. So they mitigated that $20 million they left behind. They closed out their 80 million in sales, and now they've pushed price up in there and mitigated that. So hopefully this is making sense. So what I would do is, because I see the complex pullback, is instead of focusing on that trend line, the first thing I would have done is started focusing on order blocks, high probability order blocks. Well, what did we learn about high probability order blocks? This order block created a break of structure. Okay. It left imbalance, and it also took out an opposing order block. So I know that this is a high probability zone. So I'm going to box it in. The first time it came into that, guess what? We got an aggressive reaction and price traded up 442 pips because that was a fresh zone in the market. It was a fresh zone of liquidity, but it didn't break structure. So when it started trading back down, that lets me know that they're coming back for more money that's sitting underneath this zone. Okay, is this making sense to everybody? Is this making sense? Because I don't want to lose anybody. I just want you to learn and understand what the market is doing and why. Okay. Okay, so whenever you have this order block, some people are saying repeat it. You have this order block. All right, let's go back and look at our rules for a high probability order block. Let me pull those back on the market. Well, I said on the market, listen to me. On the chart, the order block test. Okay. Did it create a break of structure? Well, a break of structure in this instance will be a higher high because the market is trading up. All right, let's give me my annotation here. This is the order block. Did it create a break of structure? Yes. Okay, it took that out. Did it leave imbalance? Yes, it did. Here's your imbalance right here, which is a form of liquidity. Your order block is a form of liquidity. So you got double liquidity there. Did it take out an opposing order block? Yes, it did. Okay. Right here was the last buy candle before it sold off. So it took out this opposing order block and boom, you have a high probability order block, which means 9 out of 10, when the price comes there, you are going to get a reaction. But was the reaction enough to create a break of structure and keep trading higher? No, it didn't. In fact, it came into this order block and rejected and traded down. If price is coming back to this zone and there's liquidity lying underneath, it's typically going to break it, like we saw in the earlier example. Okay. So if you look here, when price came to it this time right here, it reacted a little on a lower time frame. I say a little, but it was probably like a little uptrend on like a 15-minute or a 1 hour. Then it came back again. But when it broke, they tried to break again. You see this order block? It's low probability. This is low probability. It didn't leave imbalance. It didn't take out an opposing order block. It didn't create a break of structure. So when price comes down into that, there's nothing there. It didn't have any of these characteristics. So price, it broke through. It didn't hold. It didn't have enough money there to hold. There was not enough volume or liquidity within this candle to hold the market up. This liquidity was taken here and it was taken here. When it traded away, now it's trading through it. Okay, is this making sense? Okay, hopefully this is making sense. How much time we got here? We are at 9:48. So let's finish with this chart. So what I start doing on my weekly, we got it on the monthly. We look for our trading range. On the weekly, we'll look for our trend. This was a big aggressive uptrend. Price has now pulled back at least 38%. Okay. And I start looking at liquidity zones. Okay, it captured this liquidity, but it didn't trade higher. So now that it's breaking through this liquidity, it could trade all the way back down. Look what's down here. There's so much liquidity down here on this time frame. Okay. So like you got imbalance right here. And underneath that imbalance is an order block. You got a little bit of imbalance here, an order block here. You got some consolidation going on here. There's a little order block in there. Probably on the lower time frame, we're going to see a downtrend and some more liquidity. So let's go to the daily and see what the daily is doing. Okay. So this right here on the daily is creating a downtrend, but this is another one where people thought the market was going to trade back up, but it was a complex pullback. It didn't break any structure. Okay. Right here, it broke this high. But when it failed to trade higher, that's when you go back to your higher time frame and you ask yourself, oh, well, it was just mitigating this order block. This green candle on the weekly, because every time frame has a story to tell, and you have to understand the time frames and look at the patterns and look at where the liquidity is on each time frame and how price reacts to it. So on the daily, all it was doing was reaching for that weekly zone of liquidity. So if you scrunch price in, you can actually draw a trend line. And this is just for momentum. This is just to see how hard is the market selling off. That's the only thing I use it for. If it breaks, it doesn't mean anything. What means something is, did the last high or last low break? That's what gives you a break of structure, is when a high or low was taken out. A trend line break doesn't mean anything, guys. It helps us paint patterns to help us connect those dots like we were talking about earlier, okay? It helps us paint patterns to know where we need to connect the dots in the market. So going on my daily, I just start looking left. This liquidity has been taken. So if the market doesn't trade up from here and give me a break of structure, okay? Now here's a zone right here that might confuse people. When you say, well, how do you know why the order block is? Whenever you have 3 candles of the same color trade down together, they can be counted as one. So I would count this zone as my order block, because if you go to a higher time frame, sorry, my daughter was calling. You see right here, you got this consolidation off here. So we don't see anything on the weekly. Let's look at the monthly, and it went away. Let me go make this where it will be visible on all time frames real quick. Because sometimes we just need to look and see what the market is doing. If we don't understand, we start doing investigation. Well, there was an order block above it on the monthly. On the weekly, there was an order block right underneath it, which is this black candle. On the daily, it's got a consolidation zone, which we could put together as an order block, okay? Let's look at a lower time frame. So I'm going to replay this. Whenever price starts getting that far back and I start getting cluttered, I'll cut price off. Now this is what I call doing surgery on the chart. And I'll walk down to my 12. And I don't see my box on there. So let's go back to the settings and make this 24. Give me 1 second. I'm going to give the phone to my granddaughter. All right, I gave the phone to my granddaughter so she could talk to her mommy. So we're going to go down to the 12-hour and see what we see. We still see strong consolidation. Go down to the 8-hour. What do we see? Strong consolidation. 4-hour. All right, here is a nice order block right here where the market traded down and then traded away. And you can just walk it down to different zones until you see some clean price action. So I like to just understand, why is price reacting here? So we see we have consolidation and order blocks on every single time frame within that zone. And that is why price gave us the reaction that it did, okay? You don't have to do all that. You can look for the bigger ones. Like if you wanted to mark this whole zone, you would not be wrong, but I like to get nice tight zones. Here was a down close candle, price traded away. See how big it is? Now ICT, he teaches you to take the one with the most volume, and that would definitely be the most volume. So we could leave that as a zone. And I think that's why a lot of traders are confused about what is an order block, and they think it's a supply or demand zone because they see things like this on the chart. But really, as we've seen here tonight, that we can truly find order blocks and tighten up on price, okay? So what's going to happen with all USD? Well, the first thing you have to know is what is going to happen with the dollar. I called this buy on the dollar weeks ago. Like when this was down here, I put this dollar sign here weeks ago. I can go back and show you as far back as like December, while I was telling everyone to let price come and push up into this zone because there's liquidity here on the dollar. See, that's the good thing about teaching 3 nights a week and everything's recorded. I can go back and show you where I called this buy weeks ago. On gold, I can show you where I called that sell back in like November or December, all the way back there, because I look at higher time frame structure and what it's doing. So thank God for the recordings. You know how people say they got receipts. Well, I got receipts. Okay. So what needs to happen here? Remember, we said that the market will grab liquidity before it trades up. So this is a liquidity grab because it tapped into price and snap. You have a tap and a snap. So it'll tap through and snap back up. This is not a true break of structure. It could be on a lower time frame, but for the daily, price held, this order block held price up. So for this to continue buying, we would have to see price trade up and break this liquidity here. So if I see a break of structure and retest on a lower time frame, then I would start looking for buys, but I would want to see it at least on the 1 hour before I started looking for price to trade higher. So I have this little test that I do. Like if I have a 15-minute break of structure, I feel confident trading it into a 1 hour POI. If I have a 1 hour break of structure, I feel confident now after the retest trading it into a 4 hour. And if I have a 4 hour, then I feel confident trading it into a daily. So since this is daily structure, I would want to see a minimum of a 1 hour break, okay, to take it up to the next zone. Likewise, if price breaks through, I want to see it break through this and then come back and retest to trade it lower. So where price is sitting and the way price closed today, the zone that it's sitting in, you would be guessing or assuming as to what it's going to do. Now, because the dollar is in a zone where it could sell off, if the dollar starts retracing down, then all USD can start retracing up. What's going to matter is it going to go up aggressively, break and continue, or is it going to trade up correctively, grab some more of that liquidity to go back down? So how it trades away from the zone is just as important as does it trade away from the zone, okay? So going back to all USD, that is something we'll have to see what happens next week with the dollar. Another thing I do is I chart up the currency for each pair. So let's see what AUD is doing. This is AUD. This is just like the DXY. Every currency has their own version of the DXY. Now look at AUD. This is telling me that AUD pairs have been on a downtrend because this is AUD futures all by itself, okay? So if I have a dollar that is trading up, so if the USD is trading up and AUD is trading down, that lets me know that AUD USD is going to be on a downtrend. Okay, it will not go on a uptrend until AUD gets stronger and the dollar gets weaker, because you are trading. It's like you're holding. You've seen like scales, and like if you have a set of scales, okay, if you put AUD on one side and the dollar on the other side, if AUD is stronger, it's going to go up. And if AUD is weaker, it's going to go down. So you're putting them on weights beside each other. But in this instance, the one that weighs heavier is going to move to the upside. Hopefully that makes sense. All right. So what time is it? We got 9:59. Is the money coach on here yet? Let me see if he's on here. If not, I'm going to keep teaching. Money coach, if you're on here yet, drop me a DM in the chat. But does anybody have any questions about any of this so far? Does anybody have any questions about any of this so far? All right, the money coach is here. I'm going to make him co-host, but I'm going to finish up a few things, dot some I's and cross some T's. I'm telling you guys, there are some people, when he gets on here, they're going to start getting off the call. They'll be like, oh, I don't need this. Let me tell you something. Like I told y'all at the beginning, this next part that he's going to teach when we get done, I don't care if you're winning 9 out of 10 trades. If you don't know proper risk management and proper trade management, your ass is going to lose your money. Point blank, period. It's like giving money to a kid and expecting them to hold it in their hand while they're walking around the fair. You're going to lose it. Okay. So I highly suggest, because let me tell you, when did we start getting, oh, let me show you guys something. All right. When did we start getting these FTMOs? We started getting these, and I got 3 of them. I think this was my $200,000 one. We didn't start getting these until we learned proper risk management. If you're serious about trading and making real money trading, you want to be on the risk management. So I'm going to allow you guys to unmute, and then when we're done, I'll mute you back. That way, if you have any questions, you can get your questions on the recording. All right, so I've unmuted you guys. If you have any questions, speak now, forever hold your peace.
Hey, Gigi, this is Rodney.
Rodney.
When you are drawing your zone for liquidity at the order block, are you drawing a zone for the whole order block? Is that how it works?
So a bearish order block, which would be your green candle, it would be from the body up. So if this was your body and it had wick down here, you would ignore the body and drop from the body up to this wick. Okay. Likewise, if it were a sell candle and it had wick on top and wick on the bottom, you would focus on here down to here. So on the sell candles, you can ignore the wick to the upside, and on the buy candles, you can ignore the wick to the downside. But I also look at, does that order block have imbalance in front of it? Because a lot of times price will come into the imbalance, but not make it to the order block. So if you see imbalance and then an order block, what you need to do is go in a lower time frame and look inside this imbalance and see if you see a high probability order block sitting in there. So that's what I typically do. And if I get a reaction to that, then I'll take the trade. And if it breaks structure, then I'll hold it. But if it doesn't break structure, I'll either close or it'll break me out at break even. Then it'll come back into the order block. Hopefully that made sense. All right. Anybody else got a question?
Thank you.
Yes, I have.
Hey, Gigi. Oh, sorry. Go ahead.
Yes, I have a question. My name is Jarrell, and I noticed that you say when you get a break of structure, right, and then we have liquidity at the bottom, which is an order block. When price comes back down into that area, maybe on the lower time frame, I don't know if you take it on that time frame. I'm pretty sure you go to a lower time frame, if I'm not mistaken. Do you wait for higher highs or lower lows to be made, or do you wait for a bearish engulfing at that area to get in that trade? Or
so let's just say I have a daily zone with an order block. I'll look inside that daily zone to see if I have a 4-hour order block, and then I'll look inside that and see if I have like a 1-hour order block or a 15-minute. I try not to go too low, but I also look to make sure all the liquidity at the bottom of that has been taken. Okay. And yes, you can set pendings and take that. Make sure when you set pendings, you add pips for your spread or subtract. You add pips if it's a buy and subtract if it's a sell, something like that. I don't have to think about it. But like if you have a 2-pip spread, and let's just say below your order block is only 5 pips, now you need to make it 7 pips to account for that 2-pip spread, or you're going to get stopped out. And a lot of times people, that's why they get stopped out with those tight pendings, because they forget about spreads. And also the brokers will manipulate price and they will widen the spreads as it come into entry areas, because they are aware of where the liquidity is in the market. All right.
Okay, thank you so much.
If you don't want to set pendings, you can set an alert at like that 1-hour order block, and then go down to your 5-minute and wait for a break of structure retest, and then take it off the 5-minute once it comes into your higher time frame POI.
Okay. Thank you.
You're
Hey,
welcome. Anybody
DJ,
else?
can I ask you a question really quick? This is Jared.
Sure.
So I just want to know how long you're on the charts. Are you on there every day? Are you taking trades every day? And yeah, basically that's all. Like certain time frames per day, like that sort of thing.
I love to stare and watch the charts and watch 1 minute price action, because like someone said in the chat, price is fractal, and if you can watch it on the 1 minute, it's like watching the 1 hour on fast forward. Okay, so if you can read price action on the 1 minute, then you can read it on the 1 hour, then you can read it on the 4 hour. So if I'm sitting here, just like you've seen people sitting in class or talking to somebody and they're always doodling on a piece of paper, I'll sit here and doodle on my charts. Now when I see a trade like this setting up, I wait for high probability trades. I didn't take any trades until this right here. This is all I needed to have a 5-figure week. Just this one trade. So it's like when we go to the grocery store and looking for a bunch of peaches to make a peach cobbler, we only need 5, but they got 500. I don't try and take all the 500. I try and take the best ones. So each week when I mark up all these charts, let's just say I mark up 20 charts. I try to narrow it down to 3 to 5 high probability setups. This I knew was my high probability setup because I had that complex pullback and I had that liquidity zone. I had the liquidity grab. So for my confirmations, I asked myself, is it pro trend or counter trend? So I know the purpose of a complex pullback is to come grab liquidity and then continue the move. So I knew this was a high probability zone. I knew this was a complex pullback. And if you look, what do they do? You wait for them to grab liquidity. With gold, they like to do that liquidity grab with news. News moves this a lot. You see like over here, this long, huge spike, that was news that went down and grabbed liquidity. But at the time, my bias was that the market was going to buy. So when they came and grabbed that liquidity on that news, then I bought gold up. So when you learn how liquidity moves the market, you'll start focusing more on high probability trades. So I will mark up everything, but then I'll look at the ones and I'm like, man, this is so close to that zone. We got news coming this week. This trade is going to happen this week. And so I waited on this because I'm like, why waste my time, messing with other trades when I was anticipating this happening? Just like right here, we have these equal highs, okay? So I see this coming up and I see it's here. I'm not going to chase this small buy because I know I got this liquidity here. I got this high probability zone. I got this order block, this imbalance. I got news coming. I got a news snap in there, break a structure on my retest. Now I can take this sell that I'm anticipating. So hopefully that makes sense. Okay. Anybody else?
So liquidity, hello?
Yes, I'm here.
Hi, my name is Carlisle Ford. My question is, I see the liquidity zones, but I guess I'm kind of confused with support and demand, because when I look at where you have liquidity right now, I would normally say that's like in a supply zone. So why are they different? I thought I heard you mention they were different.
A zone can contain multiple candles. An order block, you can get it down to 1 candle. So you can get tighter on price. There is one specific candle where the market makers step into the room and all the money is held inside that candle. And if you watch ICP and watch his trainings, he can call trades weeks or months in advance to the pip because he understands liquidity that well. And that's why we need to train our eyes and we need to understand liquidity, because you're going to learn from Coach Chris, somebody with a 10 pip stop loss versus somebody with a 30 pip stop loss is going to make 10 times more money this year. Your stop loss is going to determine how much money you can make. I can take a person who trades 1% with a 10 pip stop loss against the person who trades 5% with a 20 pip stop loss and make more money, because you're putting less on the table. When you lose, you're losing less. When you win, you are winning more. And that's why understanding where to get in the market is extremely important. It's just like if you go to the casino and you risk $10 to make $1,000 versus somebody who risked $50 to make that same $1,000, who had the greatest ROI. So like on our team, we don't talk money. We talk ROI, we talk percentages, because the person who can understand percentages and ROI at the end of this game, they're gonna have the most money.
Got you. Thank you.
You're welcome. Anybody else?
Quick question. Are you entering on the higher time frames or the lower time frames?
I enter on the lower. So let's see. I wish I had that. I took a 1 minute gold trade and got like 100 pips the other day. Let me see if I can find it. Because I was sitting here practicing and I traded on the 1 minute. So, and what I did is I waited for it to come into my higher time frame POI. I waited for a liquidity grab. I had it in the team and I showed the team and I had it on here. And I think anybody on the team remember what day I did that? Let's see if I can find it. Yeah, I know it was a buy. It was before the big sell-off. So let me find that first. Let me find the big sell-off. It was before the big sell-off. It was one of these buys. I'll look for it while Coach Chris is on here and I'll explain it. But there was the market bought up and broke structure with news. Oh, there it is right there. All right, so we're going to replay this. And I caught a quick 100 pips. Okay. So I waited for the liquidity grab and then traded it away. So what happened is this was a complex pullback. Okay. When it traded up here, it made an aggressive move and left liquidity. So I waited for price to come back into that candle that had caused the big move. Was that it? Goodness, I can't find it now. I'm going to find it before we get off tonight. I'll look through because I got the chart somewhere. Let me pause my screen for a second and see if I can find it. I'm going to show it to you guys. And there's one or two more things I'm going to show you guys, and then I'm going to turn it over to Coach Chris. The money coach.
And thank you, Gigi, for your time. That was wonderful.
Oh, you're welcome. I really enjoy doing this stuff. I missed it. It's just, you know, with the grandchildren, when I was doing it before, they didn't live nearby. All right, here it is. All right. Can you guys see my chart? Tell me if y'all can see that.
Yes.
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 Okay, so this had caused a break. All right, it caused an aggressive break. When price came down and grabbed this liquidity and came back into this, I took the trade right here. Okay, that's where I took the trade, and I ended up making like 100 pips. And I do that to practice, but like it just like traded away. And I knew it was going to go back up to take liquidity to the upside because I knew what the higher time frame was doing. So that's how I practice on the smaller time frame, take trades on the smaller time frame. Oh, and one other thing I wanted to show you guys, like people confuse, like they try and trade head and shoulders. When I was talking about the misconceptions and stuff that people are mistaught and how we lose money, people don't know the difference in a Quasimodo and a head and shoulders. So when this comes here, they'll enter the trade right here. But this is not a head and shoulders, this is a Quasimodo. The difference is the head and shoulder would have stopped here. The Quasimodo actually causes a break of structure. This is a strong reversal pattern. So you see how you had your low, your high, your higher low, your higher high. It broke structure. It comes back into this breaker block, which is an ICT concept, and then trades away. So people confuse this with head and shoulders, and a lot of times they get their heads busted. Because when it comes here, they're expecting boom, boom, boom. When it comes back to this, they're like, oh, it came back to here, then they enter. wait until it comes back into this high here. So, and you see it's the reverse here. And what it's doing is, in reality, it's a smart money move because it's grabbing liquidity, then breaking structure, a retest and a continuation. So here's what I did with the gold. It had broken structure, grabbed liquidity and came back in, and I traded it away. All right. Any more questions before I hand it over to the money coach? Yeah, the Quasimodo is very profitable.
Gigi, do you still use the Fibonacci to confirm like these liquidity areas and order block as well?
I don't use it to confirm it, but here's what you can do. If you have, if the order block is covered by the institutional levels like the 62, 78, and the 88, if I look left and I see an order block within that zone and it's got all those polys, I'm like, oh yeah, price is probably going to come back down to that. My main thing is it 50%? Like if you look at this, the reason I have this mark is on my higher time frame. It came back to 50% of like that imbalance. So I want to see price trade into here before I look for the sell continuation. So I'll start looking within that zone as I go down to lower time frames. There's more imbalance there. This is messy, but there is an order block here on the 4 hour. And I just start looking for zones that have multiple time frames, have order blocks and imbalance within those zones. So you're going to get a reaction probably at this one. And if that reaction doesn't break structure, then it's more than likely going to trade up to this one. But the tricky thing about this one, and a lot of people miss it, look what's sitting right above it. So they'll probably do that liquidity grab like they did on GU that we covered earlier. Like if they trade up into this, it's called a smart money trap, where they would probably run the liquidity on this one to go after this one and then sell off. So that's like double whammy right there. They could get 2 for 1, 2 for the price of 1 by running this. They can also close and mitigate this before trading lower. Okay.
Thank
Gigi,
you.
someone had asked, how do you manage emotions in trading?
It's just money. If you focus on the skill set, the money is a nice side effect. If you focus on the money, you're never going to get it right. People, you have to do this for the love of the game, for the love of, like I tell people, and I thought about it one day. I said, I have a special side. I have a special kind of superpower. I can predict the next move in a $6.6 trillion a day market. How many people can do that? Well, almost everybody could do it if they put in the charting time and if they focused on the skill set and not the money. You have to detach from the money, and that's why they tell you never trade. And you're going to hear our money coach talk about this. Never put more on the table than you're willing to lose. And you'll know when he gets done, you're going to be amazed at how much your mindset is going to change. He's going to cover how you can trade and not care about how much you lose. There's really a science to it. He's going to go into that. So I don't want to take away from what he's got to teach because he teaches it very well.
You got to have a good coach, Gigi.
Hey, these charts busting your ass is a good coach. But I wanted it bad enough. I had to ask myself, do I want to keep working for somebody the rest of my life? Or do I want the freedom that I deserve? You know, we're brainwashed by society. Like I had to have this conversation with my dad. I was talking about my nephew had taken like $400 to $5,000 trading, and he's a high school dropout. And my dad made the comment, oh, if he's that smart, he should go back to college. I said, why, Daddy? All your kids have a college degree except for me, and I make more money than every single one of them. Every single one of them. My sister is a PA. My sister spent 8 years in college. I make more money than her. She can write prescriptions. I make more money than her. I get to sit at home. She just got COVID from going to work at the hospital every day. I make more money than her. I'm like, Daddy, please don't try and brainwash my nephew into thinking he has to have a degree to be successful, because you don't. Okay. Most self-made millionaires, most wealthy people, they're not working for anybody. They're not doing whatever that degree was in. And I gave him several examples of people we know who are wealthy. And I'm like, Dad, you got a 4-year degree and you worked 28 years and you had to start a part-time job the next week when you retired. Come on, let's be for real here. I'm like, I love you, Dad. And I got my strong work ethic from him, but let's be honest. This right here, if you will put in as much time on these charts as you put in on traditional education and working for other people, we can be the future Q banks and all these other people out here just buying these Lambos and making all this money. So I'm going to the FX Summit in Miami in May. I hope to see some of y'all there. I'm gonna let my coach start taking over, but I'll answer questions while he's coming on. Y'all, I'm telling y'all, this next part is what, even if you only get half of your trades right, you can be a six-figure trader if you do what he's about to show you. You can lose 50% of your trade. Why do I know we have people funded who are only winning 50% of their trades? It's all about risk management and trade management. I don't care how many times I watch him teach this, I learn something every time. So I know if I'm gonna stay on, y'all need to stay on too. So I'm gonna turn it over to you, money coach. All right. And somebody's talking about age. Let me tell you, we have people in their 60s on our team who are kicking ass. We have people who are funded with $200,000 accounts on our team who are in their 60s. Okay. So age does not matter. I know I look 29, but I'm a 54-year-old grandmother, and I'm handing some of these young kids their ass in this market. I go in these chats and I don't let them know I'm a woman. I don't let them know my age because they got, you know, it's very competitive out there and I don't understand it. So anybody can do this. I've had people who were in prison on my team. I've had people who were high school dropouts on my team. I've had doctors and lawyers on my team. So anybody here can do this. And I'm gonna shut up and give it to money coach and I'll answer questions in the chat. All right, unmute yourself, coach.
Hello, everybody.
Hi.
Hi. All right, this is the
What's up?
part. This is the part where I allow you guys to responsibly unmute yourselves. But once you finish talking, you have to immediately mute yourself back. All right, you can do that by holding down the space bar when you want to speak, and it'll unmute. And when you let the space bar go, it'll mute you back again. Okay, that's an easy way to do it. All right, so I need everybody to tell me hi and then mute again. Everybody.
What's up?
Hi.
Hello.
Oh,
Hi.
Boom.
Hi.
And do me another big one. Put in the chat and tell me where you from. I want to know where we from. Everybody rep. Miami.
Toronto.
Put in the chat. Toledo.
Brooklyn.
Yes. DMV, Barbados, NYC, Nicaragua, Trinidad, North Khaki, Jersey, Dallas, Tennessee, okay.
Ghana.
Ghana, South Africa, Staten Island, Windy City, Shy, okay. Man, y'all, I love this. I love this. Where else can you go international on a Friday night? I'm with you. Michigan, Central Ohio, very good. Brethren. Right. All right. I'm not going to prolong this, and I need everybody to get your calculators out because we got a pop quiz tonight. Money coach just about to drop a pop quiz. You know how it was when we were in school. You came to school, didn't know a pop quiz was going to happen. Teacher would say, take out your paper and pencil, and you got a pop quiz coming. All right. You're going to tell me the answers. This is how I know what you are comprehending and what you're not. And if your answers are not aligning with the right answers, and I have the right answers here, then I'm expecting to see you guys understand where your mistake is. All right. Let me jump in by saying first, I fell in love with risk management because Gigi and I are best friends. And, you know, I'm best friends. We kind of talk all the time. And, you know, Gigi gives and gives and gives and gives and gives. And she does a lot, calling signals, teaching, just doing so much. And anybody who's ever been connected with somebody who's a giver, you have to know that they will give until they have no more to give. And then at that point, they just shut down and it's very draining. And so I got to a point where I was just like, I'm not as amazing as a trader or an analyst, market analyst as Gigi is. I'm working on it. But I said to myself, there's got to be something that I can do, that I can bring to the table that can help Gigi, that can help the group. Because I never want to be a taker and not a giver. I always want to give something. I want to do my part because it's a team effort. If you're a part of a team and you're just leeching off of it, then you're a cancer, and cancers need to be cut out. Find something that you can do and add to the team, whatever that is. And that thing for me was risk management. I have a way of explaining risk management that for people to really, really understand. And like Gigi said, if Gigi, could you do me a solid, and can you let me stop sharing one more time for 1 second? And I want you to, let me see, stop share. Where is my stop share? Oh, Gigi, can you put your certificate back up, FTMO? Read what that says. The trader has passed all the trading objectives, which proves a rigid discipline by succeeding in the FTMO challenge. The trader has very clearly demonstrated perfect money management and the quality of risk management with a period right behind it. Now, if you don't, now this never said anything. All this says is perfect money management and the quality of risk management. If you thought that this was going to be the part that was just going to be yawn, this doesn't mean anything, FTMO has said clearly, you have to have a quality of risk management in order to become a funded trader. Thank you, G. Appreciate that. All right, share screen again, boom. So this part that I'm teaching is vital for anybody that's trying to become a funded trader, and even on your personal accounts. All right. On this particular demonstration tonight, the win ratio was 33%. We only won 33% of our trades on this particular portion of it. By the time we finished, we still came out in profit. Where can you lose 7 out of 10 trades and still be profitable? When you flexing the muscle called risk management. All right. That's when you do that. All right. I need everybody to drop RM for risk management in the chat, and we're gonna start. RM. Flood the chat with RM. All right. Risk management. If you plan on getting a certificate from FTMO, trust me, you better learn what risk management is. Let's begin. The definition of risk management means risking a certain predetermined percentage. And for all intents and purposes, we're going to call it 1%. We're going to agree that 1% is what we're going to risk on the trades, all right? Of your overall current balance. That is important, your overall current balance, okay? If you start out with $200 and you win a trade and you won $10, your current balance now is $210. So you have to find out what is 1% of my new balance and not what the $200. Does everybody understand that? All right. Trading rules, this is how we find out risk management. Divide 1% of your current balance by trades SL, which is stop loss, and move the decimal point to the left 1 digit, which will give you your lot size. This is how you determine your lot size. You divide 1%, whatever 1% of your current balance is, you divide that by the stop loss, and you move the decimal to the left one place. All right. For example, if a trade was called, let's just say trade was called, and this trade had a 30 pip stop loss, and the starting balance was, let's just say this is our starting balance right here, $2,838.48. This is how much we're starting tonight. This is the current balance tonight, is $2,838.48. All right. We know that if you want to find out what 1% of a number is, what you do is you move the decimal place to the left twice. If I move the decimal place on this number right here to the left twice, I would see $28.38. Does everybody see that? Type yes or no in the chat. Very good. Does anybody not see it? Did anybody not catch it? In order to find out what 1% of a number is, let's just say if 100. All right, let me. 100. What 1% of 100, if I move the decimal place to the left twice, I would see $1. That's how I know what 1% of a number is. Just move the decimal place to the left twice. $2,358.48. If I move the decimal place to the left twice, I would see $23.58. Does anybody not understand what I just said? That is just a cheap, quick way to understand what 1% of any number is. Does everybody understand that? Cool. All right. So this is what we do. You take this number, $28.38, and you divide it by whatever the stop loss is. So on this particular trade, it was 30 pips. So down here, I divide 28.38 by 30, which gives us 0.946. All right. Then from there, I move the decimal place to the left one time. That will show me 0.094. And you know, a lot size is only two numbers, so the lot size will be 0.09. Does everybody understand how I got that? 0.09. Does everybody understand that? Unmute yourself. And unmute yourself and tell me, does anybody not understand?
Can you do it one more time, please? I'm sorry.
All right.
Did you say, you said 30 is the stop loss? I thought the stop loss is like a number. That's what I've always been told. Like 0.254 was like the stop loss.
No.
But you said 30 pips is the stop loss?
Yes. 30 pip stop. You have to calculate the stop loss. If price is at, let's just say if price is at 300 and your stop loss is at 270, how much is this? How many pips is that?
Oh, I don't know. I don't know.
300 minus 270 is 30.
Oh, okay. Oh, so, okay. So they just say it differently. Gotcha. Okay.
You follow me?
Yeah.
All right. Wherever you enter 30 pips from that place, you will lose that trade.
Okay.
Understood? Okay.
Yes.
So taking it again, this is our current balance, $2,838.48 right here. In order to know what 1% is, I take the decimal place, move it to the left twice. I see $28.38.
Ah.
I take that number and divide it by the stop loss. The stop loss is given 30 pips. So I take 28.38. All right. Can you see my calculator on the screen? Yes, no?
No.
Okay.
No.
Hold on.
No, not yet.
Let me do this. Boom. Can you see
So
this? Can you see the calculator now?
Yeah,
All
we
right.
can see it.
Yes.
$28.38 divided by 30. 0.946. If I move the decimal place to the left one time, I would see 0.094. That's this number right here. All right. And we know that a lot size is only two digits from the decimal place. So 0.09 would be our stop loss. Okay. I mean, our lot size, forgive me. All right. Now, this is what I want us to do. This is our starting balance. Put in the chat what 1% of our balance, because we lost on this particular trade. We took on EN, Euro NZD. We lost. We risked 1%. How much did we risk? How much did we lose on this trade? Put in the chat. $28.38. Correct. Correct, correct. And so what we do is we subtract 2838 from our balance, boom. We lost 2838, and now our new current balance is 2810.10. Does everybody see that?
Yeah.
All right, good. Let's go to the next
Now
trade.
you said the pip size is just a given. You're not calculating the stop loss.
The stop loss is always given.
Okay.
Okay, look on my chart right here. You see where it says stop loss is 50 pips
Oh, okay. Yeah, I see that.
and the TP is 100 pips?
Got you.
All right. Okay. So on this particular deal, we won this particular trade, but what is 1% of my new current balance after that loss? Somebody put in the chat. So I know you see it. That's one, correct. That is 1%. Now, what is our lot size if we have 2810 and we have a stop loss of 50? Somebody put in the chat, tell me what our lot size would be. This is the pop quiz. I see 0.06. I see 0.6. I see 0.06, 0.05. Does this calculation work? It works everywhere. 0.05, 0.05, 0.06, 0.06. And let's show you, let me show you. $28.10 divided by 50 equals 0.56. All right.
So that's your lot size.
Right.
Okay.
At the time we were rounding up, but if you round up, it would be 0.6, or you just keep it at 0.5. For this particular demonstration, we rounded up 0.6. All right. Boom. So 0.6, that's our lot size, and we won $60. All right, because it went 100 pips. $60, we added $60 to our current balance. Now we have a new balance of 2870.10. All right, next trade. Somebody tell me what my lot size would be. Our current balance is 2870.10. Stop loss is 34 pips. What is our lot size going to be? 0.8, 0.8, 0.8, 0.8, correct. All right. This lets me know we would be getting 80 cents per pip. All right. 80 cents, and it went 100 pips. That's won $80. Our new balance is $29.50, $10. All right. That's our new balance. What is 1% of our new balance? Put it in the chat. Correct. All right. 29.50, 10. Look, we lost 1%. So we lost this amount. We've already done the calculation. Somebody's in the waiting room, you guys. So somebody let them in. All right. So we lost $29.50. Our new balance is $29.20.60. All right. Let's keep going. That's our new, what is 1% of our new balance, everyone? Good, Alnita. Good, Rodney. Good, Jazz. Good, everybody. Very good. All right. This is 1%. Our stop loss is 45. Divide 1% by 45. What's our lot size? 0.6, 0.06, 0.06. Answer is 0.06. Correct. That means we would get 60 cents per pip. 60 cents times 20 is $12. We won $12. So we added that to our amount. This is how we came up with $29.32.60. All right, let's proceed. What is 1% of our, notice how much we lost. We only lost $29.50. Notice how much we lost up here, $28.38. Our balance is $28.38. This is how, if I lose $28, $29 out of $2,800, I'm not mad. I'm not losing any sleep. Do y'all see that? Because you asked the question, how do you detach from losing, detach from the money? That's the beauty behind risk management. I go into the trade already knowing how much I'm willing to lose. I'm only willing to lose 1% of the trade. I would have to lose 100 trades in a row to actually go belly up. And that's not going to happen. All right. So let's continue. All right. 29.20. All right. So we have, what is 1% of our new balance? 29.20, 60. What's 1%? Type it in the chat. Good, good, good. With our stop loss of 45 pips, what would be our lot size? Show it to me. And everybody needs to be doing this calculation and entering it. Don't let just 2 or 3 or 4 people do it. Everybody needs to be doing it. I need to see 120 20 people flood the chat. Very good. 0.06 is your lot size. That means we would get 60 cents per pip times 20. We won $12. Let's continue. We lost 1%, which is $29.32. See how we lost $29.32? Subtract that and keep going. 1% of our new balance is of 29.0328. Very good, Jazz. Very good, Bank Heist, Chantel, Jared. Very good. So we subtract that from our new balance. Now we have 28.7425. What is 1% of our new balance? Very good, very good, very good, very good. Good, Cornwall, I see you. Good, Nina. Very good. All right. This is how much we lost because we lost on this particular trade. All we do is take that and subtract it. We're now down to 2,845 and 51. All right. Now tell me what 1% of our new balance is. Good, good. With that being said, we have a winning trade. The stop loss is 40 pips. Somebody put in here and tell me what divide our 1% by 40. Tell me what our lot size is. I see Brian, I see point. Okay, y'all are on the money, on the money. I love the quickness. Getting this lot size in quick can be the difference between you making money and losing money. If you can figure this out quickly, all right, we have a lot size of 0.07, correct. That means we get 70 cents per pip. It went 20 pips, we won $14. We add that, all right? What's 1% of our new balance? Everybody. Beautiful. Beautiful.
Is it 0.7 or 0.7? I mean, is it 0.7 or 0.07? I saw 2 different answers.
Okay, who is this talking to me?
Vanita, I saw 2 different answers.
Okay, Vanita. All right, let's do this. Tell me the answer you got. What's Vanita, tell me what 1% of this number is, our current balance. What's 1%?
28.45.
All right, how many pips is the stop loss?
40.
When you divide 1% by 40, what number did you get?
0.71125.
0. What?
71125.
Okay, 0.7. Now, if you move the decimal place to the left one time, what numbers do you see?
0.07.
Got your answer?
Got you. Thank you. Thank you.
There you go. And just keep on doing it. Do the math with us, all right? So you just told us 0.07, boom. That means 70 cents per pip. We won $14, $28.59. No problem. I'll take that. I'd rather win 14 than lose 28 any day. Laugh at these little 14, but they add up.
Question.
Yes.
Yes. I guess you'll get into it, but I'm like trying to figure out how do you calculate what you want your stop loss to be? Is that something you're going to mention down the road? That is not even a part of risk management. That is a part of analyzing the charts. Gigi will get into that. Okay, gotcha. Thank you. Good question, because you have to know, you have to find out where your stop loss is going to be. But that is a part of it, because in order to know how many pips, you got to know where the stop loss is. Very good. All right. Good question. All right. What is 1%? 28.59. We lost that. All we do is subtract that from our balance. We have a new balance of 28.30.92. What is 1% of our new balance? Very good. Very good. We had another loss. So y'all already told me this is how much we lost, $28.30. You see that? And boom, our balance is 28.02. No problem. What is 1% of 28.02? 62. Very good. See how easy it is, that little cheat method? By just taking it and moving it to the left twice, easy way.
So just like you said, we lost $28.02. Our new balance is 27.74.60. What is 1% of our new balance? Very good. It's that easy. If you're not putting this in the chat, then you're losing. I already know you're not going to get FTMO funded. The people who are putting this in, I know they can do well on getting funded for FTMO. All right. So we have 1%. Boom. Now, this is the end of this particular section. Now, here we lost 8 trades. We won 4. Okay, we only won. We started out with 28, 38, 48. By the end of this particular section, we have a balance of 27.74.60. All right. Now, look at our stop losses. Our stop losses have been 40 pips, 45 pips, 34 pips, 50 pips. This is when Gigi was saying, when you get to the point where you can actually go to the lower time frame and responsibly understand how to enter on a lower time frame, that you can have smaller stop losses. Now watch the money. All right. The next section, these are trades that were called by, one was called by Terrell and one was called by G. The rest were called by Gigi. They won 67% of the trades, 67. On any test, if you make a 67, that's an F. But only here is this an A. Okay, let that bless you. Only here can a 67 be an A. Here, because we're doing risk management. Let's begin. We already know that our balance is 27.74.60. We already know that. I see some people already put it in there, 27.74. Divide that by 25. Somebody tell me what our lot size is. Okay. Okay. I see 3 different numbers. Okay. 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 0.11. Okay. Let's see. 0.11. All right. You take $27.74. You divide it by 25. You move the decimal place to the left once. You should see 0.11. All right. So this lets me know we would get $1.10 per pip. It went up 60 pips. We won $66. We're automatically, boom, back up to $28.40. $28.40.60. All right. All right. Let's do it again. What is 1% of this number right here? Our new balance. Very good. Very good. I see the same names. That's all right. I'm here to talk to that 1%. If you want to be in the 1%, you should be doing the numbers. Good to Car. Very good. 28.40. Stop loss is 10 pips. Somebody tell me what, put in there what our, okay, I see 0.28, 0.284. A stop loss can only be 2 numbers. So you have to cut the 4 off, 0.28. Let me scroll down. 0.28 is it. We won $47.60. What is 1% of our new balance? Yes, yes, I love it. I love it. All right, we took a loss. So you have already calculated how much we were going to lose. We lost $28.88, no problem. We're now down to 28.59.32. What is our new 1%? Very good, Jared. Very good, dude. I see you. Very good. Very good. All right. Let's take that and divide it by 15. This is our new lot size. What is our lot size on this GCAD win? Man, look at these numbers flooding. I love this. I love this. Pop quiz. I agree with you. Lot size was 0.19. It TP'd at 140 pips. This means we were going to get $1.90 per pip. $1.90 times 140 is $266. We are now in the profit at $3,125.32. With all the losses that we took, we are still in profit. This is the beauty behind risk management. With all of the losses that we've taken thus far, we're still in profit. This is the beauty behind risk management. This is why FTMO is saying they're looking for people who have exuded the quality of risk management. How can you lose all of those trades that we just lost, but we're still in profit? Because of two words: risk management. All right, let's continue. 1% of our new balance is what? 31.25. I love it. Thank you. Thank you. Put the number in there. Very good. All right. So on this gold trade, what do we lose? We lost $31. I'm not losing sleep. To lose $31 out of $3,125, I'm not losing sleep. I'm looking for the next trade. I'm seeing where I went wrong. Whoever put 30.94, yes, you're already on the gun, because you already. I love that. I love that. And that's exactly how much we lost on the next trade. We're still losing, but we're still in profit. Did you hear what I said? We still losing, but we're still in profit. Risk management. So our new balance is $3,063.13. I see some people have already jumped the gun. Thank you, because you know what I'm going to ask you. I see you trying to, those, when you were in school and the people who finished the test first and they turn the paper in, those are people who I'm dealing with right now. They're hurrying up and get the test in. All right, 1% is $30. And I already see some stop losses. I see some lot sizes. 0.10, I see you. This means that for every pip, we would have gotten $1 for every pip. It won 80 pips, we won $80. This is our new balance. Show me the numbers that I want to see. What's 1%, everybody? Look at you, look at you, look at you, look at you. And somebody put math, OMG. Man, this is easy. This is easy. I'm giving you the cheat sheet, all right? Boom. Look at this stop loss, 10 pips. What is our lot size? Beautiful, 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 beautiful. All right, let's see how many pips we want. 100 pips. That means lot size was 0.31, profit $310. Look, we're still in the profit. We're in profit about $600. With all the losses that we took, we're still in profit $600. Where they do that at? Let's keep going. What's all right? There go my 1%. There go my 1%. Here's our stop loss. Somebody put on the lot size. Let me see what this lot size is about to look like. 0.23, 0.23. I see some Michael Jordans. I see some Shy City stand up. I see MJ. I see the number 23. All right. Look at this. Lot size 0.23. That means for $2.30 per pip, it won 115. 115 times $2.30 would give you $264.50. All right. And this is our new current balance. And all of my people who ready to turn in the test, they already calculated the 1%. You see that, G? They on the money. I love this. I love this. Now look, this comes to the end of this section. All right. Gigi and Terrell. Terrell called one on this particular, and Gigi called the other 8. All right. Terrell called 1, Gigi called 8. All right. And out of this, they lost 3, won 6. The balance was 227.74.60. We were in the hole, maybe what, close to $100. We ended this particular week with their trades in the profit, 3,700. You see that? Up 900. We up 900. With all of the losses we've taken, we still up 900. All right, let's proceed. All right, 1% of this number of our new balance is what? 37.17. We got a stop loss right here of 65. Now, this is Titan. On this particular platform, Titan, they call indices. All of these are going to be indices, all right? All right. What is our new lot size? If we take 37.17 divided by 65, I see 0.06, 0.06, 0.06, 0.06. Somebody put a 0.6. I think you need to move your decimal place to the left one time. Recheck your math. Recheck your math. I see that 0.06. Oh, 0.05. Gala, I think you might need to round up on this particular 0.06, 0.06. Oops, I see, there you go. All right, very good. That means we would get 60 cents per pip times 58, 34.80. What is our new one? 37.52. I love it. I love it.
All I'm
All
gonna
right,
say is y'all see the difference in the lot sizes once those stop losses get bigger. That's
Right.
why I'm telling y'all those tight stop losses. By the time these big stop loss people are in profit, we done made 300 or 400%. Let me stop.
Exactly. All right. We got 1%. I see 0.08, 0.08. I see you. 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 Very good.
Look, we
very
taking
good.
partials and they just pulling in the profits.
Exactly. Exactly. Very good. 0.08. That means that we won $80. This is our new balance. What is 1% of our new balance? Show it to me, people. I see it. I need to start a church. Y'all need to be on my finance ministry. I see my trustees right here. Very good. All right. Here's the next trade. It's a winning trade. Stop loss is 100 pips. Boom. Now in GG section, we were having lot sizes of 0.32, 0.28. Now they back down to 0.04. That's the beauty of being able to analyze to a lower time frame responsibly, though. All right, 0.04. You are correct. 0.04. That means we won $40.40. I would rather win $40.40 than to lose $40.40 any day.
I got a question for you. I got a question.
Okay,
Miss Vanita,
caller, what's your name?
Vanita.
What is your name?
This is Vanita.
Vanita with a V.
Can you hear me? With the V as in victory, yes.
Vanita, hi. Everybody say hi, Vanita. Right. This is like AA. That's what we do. Okay, Vanita, caller, what is your question?
How did you get the one quick time? How did you get that $40.40?
All right. Okay. How many pips? First of all, when your lot size tells you how much you're going to risk per pipette. You know what a pipette is, Vanita?
The percentage of a pip, right?
What percentage? Right? How many pipettes does it take to equal one pip, Vanita?
Oh, I don't know. I don't know that.
10.
10.
Okay, so you just learned something. It takes 10 pipettes to equal one pip.
Just think of it like this. The pipette is a penny. The pip is a dime.
Okay. Correct. So 10 pipettes make one pip.
Correct. So your lot size is really telling you how much you're risking per pipette. So if my lot size is 0.04, and that's my pipette, 0.04 times 10, 0.04 times 10 is what?
That's okay. I see what you're saying. That's where you got the 40.
That's 40 cents. 4 cents times 10 is 40 cents. You with me, Vanita?
Yes.
All right.
Yes.
So if I multiply 40 cents times 101, which is what we TP'd, we get $40.40.
Oh, got it. Thanks. Thank you.
Correct. All right. And for those people who are talking about with Vantage as the broker, I also find that despite calculating lot size, if your stop loss is wide, you can lose more than what you calculate. That's why you have to also add in to your stop losses the spread. If your spread is 4 pipettes, you have to add 4 pipettes to your loss, to your stop loss. That's how you actually get the proper risk management. You follow me, Kellyanne? You have to include the spread when you're doing that. Very good, Kellyanne, very good. Let's proceed. What's 1% of our new balance? Everybody drop it in. Brian, you looking like you about to be the head trustee. You jump on it. All right, very good. Let's see what the next trade, let's see what the next trade is gonna look like. It's a loser. So you already telling me how much we lost because we already calculated it. $38.72. We subtract it, we keep it going. What's our new 1%? Good, Ro. I see you. I see you. I hope the people from Staten Island and from Chicago and from South Africa and Ghana and Dallas and Vegas, I hope all y'all doing this, all right? I want to see everybody. 38, all right, very good, 38.34. This is our stop loss is 100. What is our lot size? 0.05, 0.04, 0.04, 0.04, typo, I love that. 0.04. Vanita, this is 4 cents per pipette times 10, which means for every pip, we would get 40 cents. 40 cents times $27 is $10.80. That's how I came up with that number, Vanita. And we
Yeah, I
added that.
got it. I got it that time.
You got it. You saying it like you got it. Like you got the Holy Ghost. You said, I got it.
I got him too.
Hey, yeah. 38.44. People who are churchy, they are seriously laughing right now. They just not on, they muted, they laughing. 38.44. All right, stop loss is 85. Let's see what we're talking about. Jazz, you trying to get on the finance ministry too? What's the lot size? 38.44.91 is 1%. We got a stop loss of 85 pips. I see a whole bunch of different numbers. I see a bunch of different numbers. I see some 0.04s, 0.05s, 0.04. Let's do the math. All right. So we had 38.44 divided by 85. No, 85. 0.45. If we take this and go 0.04, yes, it would be 0.04 or 0.05. 6 and up, I will round up. That's why some people getting lost. From what I have started doing is I just do it raw. I don't do any rounding. So 0.04, all right, for this particular exercise. We won $14. We got the New Balance. What? All right, Jazz, I see you on the New Balance. Where my New Balance people? Very good, very good, very good. We got a winner. Tell me what my lot size is. Good, 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 good. 0.38, yeah. So if you round it up, 0.4, yeah. Very good. 0.04 is what we got, all right? We risked 40 cents a pip. We won 100 pips. We won $40. I'll take that, all right? And what's our New Balance, 38.99? See, I appreciate that. My deacons are already counting the money. Before I can even get up to preach, they're already counting the money. What's my lot size? Anissa, what's my lot size? Jazz is the new treasurer. Yeah, yeah. Let's see, 0.05. For all the people that got 0.05, you were correct on this exercise. We won $8. I would rather win $8 than lose 300 any day. Ask your mama, I promise. All right, 39.07, that's 1%. Stop loss is 50. What's our lot size? Very good. Very good. Very good. And I'm confirming 0.08. 0.08. We won $16.80. I would rather win $16.80 than to lose $400 any day. All right. And I believe this is our last one. 39.24. All right. 39.24. We have a stop loss of 90. We have a lot size of 0.04. We won $7. I would rather win $7.20 than to lose 1,000 or blow my whole account. Can I get a witness? Can I get a witness?
Well,
Amen. Huh? Is anybody else? Is anybody else out there like me would rather win $7.20 than to blow your whole account? Because trust me, there's some people blowing accounts all over the place. All right.
That winning sound like God to me.
Yeah.
Profit
Yeah.
sound like God to me. He said, put his money and let it profit.
Huh?
He'll
Don't fool
take
me
that talent
now.
back from you.
Don't fool me now. All right. Now look at our balance: $3,931.31. Now this is all in 1 week. Everything that you saw is 1 week's worth of signals from this particular platform. All right. That this came from. All right. This is 1 week of signals. All right. If you prescribe to this particular platform, this is, and I'm under NDA with other organizations. So that's why I speak in the text that I am. But this was just 1 week. All right. So at the beginning of the week, we started the week with 2838.48. All right. We ended the week with $3,931.31. We took profit. We profited $1,092.83. We made $1,000 this week. Start with 2838. All right. Our account grew 38%, 38.5%. $1,092.83 is 38.5% return on investment. Yes, Ro, of a starting account of 2838.48. FTMO is requiring you to grow your account by 10% in a month. We just grew this account 38% in a week. I'm gonna say that again because somebody still ain't caught that. We made 38.5% profit on our account in a week. FTMO is asking you to get 10% in a month. With all of the losses that we took. Now let's just do this. Look at this. 4 out of 12. All right. Let me do this math. Let me do this math. I there I go. Dropping pins. Y'all heard me dropping pins around here. All right.
I'm gonna show y'all something crazy when he gets done.
Now check this out. Check this out. 1, 4, lost 8 here. All right. Here we won 6, lost 3. All right. And here we won 9, lost 1. All right. Now check this out. According to my calculations, we won 19 trades and we lost 12. All right. 19, 12 is 31. So check this out. 19 divided by 31. We had a winning percentage of 61% this week. 61%. Gigi, write that on the screen for me. 61%. 61%. Now, for every 10 trades, we lose 4. We only won 61% of our day, but we grew our account by 38.5%. Where they do that at? If you don't understand the beauty behind risk management, the reason that risk management is required when you're trying to become funded, this is the type of stuff that this has nothing to do with the charts. This is all about risk management. Numbers don't lie. You're right, Ro. That's exactly what it is. And these are the things that Gigi, myself, Grant, Justin, quite a few of you all weren't taught when you first came into trading. Nobody told us how to calculate risk management, how to know how much to risk on a certain trade. We were just putting some money on. We were being greedy, we were being aggressive. We would say, hey, if I see if I make a higher lot size, then, I can win more money. But we didn't realize the higher lot size you use, the more you'll lose. Yes, so many accounts have been blown because of risk management. When you don't manage your risk, you are guaranteed to blow your account. You're gonna learn today. Several people have taken FTMO and failed. And if you be honest, you failed because you over leveraged, because you risk too much. If you be honest, can anybody be honest on this chat and drop in the chat, preach if I'm stepping on your toes. If any of you have lost an FTMO, type the word preach, and you ain't by yourself.
Questions?
Caller, who's there? What's your name?
This is Carlisle.
Carlisle? Where you
yes.
from, Carlisle?
Brooklyn, New York.
BK, talk to me.
Yeah. So all these trades, I'm assuming these are trades based on just one position, correct?
One position?
Yeah.
You mean
like the lot? One position with a lot size of the calculation
Yes.
and
Oh,
plus
yes,
one
yes,
of
yes.
the calculated. Yeah.
This is 1%. This is one position.
And with the calculation of the lot size. Okay, I just want to be clear on that.
One position.
Gotcha.
If you were going to do two positions, then you would divide it by two and
Correct.
split the risk.
Yep.
Right?
Okay.
Yeah, that's how you do it, BK.
So let me ask you a question, and looking at the screen right now, let's go to where it shows the balance is 37.17.63.
Correct.
So if you wanted to take two positions, you're saying you would split that lot size in half?
Correct.
Is that what I'm understanding? Okay.
Absolutely. If your lot size is 0.04 and you want to put two positions, then you need two positions at 0.02.
Makes a lot of sense. Gotcha.
It's math, bro. Now this is the stuff but the funny part about it is all we did was addition, subtraction, and division. This is the stuff we learned when we were in the first grade.
Mm-hmm.
All of that calculus and all of that, trig and all of that, pre-calc and all that out the door. This is all we really needed. All right.
Okay, brother.
That's how we do it. All right. I was on the call recently. Someone asked about a stop loss. The leader of the call stated that they have a mental stop.
That was me.
That was okay. That's when I realized that's what I was taught. And now I'm changing mentality. 61% we won. And we still came out with 38.5%. If you did 38.5%, and look, let me just blow y'all minds. Let me just show y'all the power of risk management. All right. Let me just go back from the beginning. Because see, I was doing these calls weekly. Let me just mess y'all up. We started our first account. We started an imaginary account with $200, and this is the end of the deal. We started our account with $200. And every week I came back and did a risk management call and calculated if we had done 1% strictly on every trade, what would we have made or lost? All right. This particular week, we started with $200. We ended with 517. We grew our account by 158%. 158%. Week number 2, we started with 517. We ended with 911. We grew our account by 350. What is that? We grew our account by 35%. No, that's overall profit. No, we grew our profit by 76%. We grew this 517, we grew it by 76%. All right. Again, we started this account with $200. Now it's up to 911. Does everybody follow me? Unmute yourselves. Does everybody follow me?
Yes.
Yeah.
Yes,
Yes.
sir.
We started
Yes.
with 200.
Yeah.
We're now up to 911. All right. Look, then we started with 911. This is the next week. We started with 911. We're ending this week with 1821. We grew this account by 99.8% that week. All right. Okay. The next look, so the ending balance is our starting balance of the next week. Let's see what we did. Look, we started with 1821. We ended with 2838. We grew this account by 55.8%. All right. This is in a month. 1, 2, 3, 4. This is the end of the first month. We started with $200 and we have now a balance of $2838.48. By the end of the first month, we had grown that $200 account by 1,319% within the first month off a $200 account. But let me keep on blowing your mind. Again, 2838.48 is what we ended with. This week we ended with 3931. This week we ended with 4831. This week we ended with 5572.47. Now, when you see a losing week where we actually started with more and ended with less, let me know, because I ain't seen it yet. But 5572.47, 8941.21, 17,749. Do y'all see that? 23,730. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks. In 10 weeks, we grew a $200 account to 23 grand. But we ain't done yet. You see that the week of May the 18th, 21? Check this out. Started with 23 stacks. Now we have 55 racks. This what the people who logged off, this is what the 40 people who just logged off, this is what they don't understand. When you can take a $200 account and make it to 55 in 11 weeks, but we're not done. What's the 12th week? 12th week, look what we got, 123 grand in 12 weeks. Let's keep pushing. We got 203,000. We got almost $250,000 in 13 weeks from a $200 account. We ain't done. Look at this. We up to almost $500,000 in 14 weeks. This is the last week we did it. Look where we at, 509. We almost at 600 grand. I mean, what from a $200 account? I mean, but I'm still trying to figure out where the value isn't. I don't understand. Risk management is everything. You can have the knowledge, you can be trading your butt off, but if you over leveraging, because you're gonna take losses. The greatest take losses. Michael Jordan took losses. Venus and Serena took losses. Muhammad Ali took losses. Even Floyd Mayweather has taken losses, not in the ring, but in life, in money. He's lost money. You're gonna take losses, but risk managers and making those losing. I'm only gonna lose a little, but I'm gonna end big. Look on this day, 456,000. This is how much we started. Let me show you the losers and show you how much we only lost. Every time we lost, just against 480,000. I lost $4,600. I'm not mad because I got 460 grand left. I'm not mad at that. Look, 4,000. Look, 4,800. 5,200. 5,700. Look at the winners though. Check the wins. Check the wins, 13 racks, 9 racks, 4 racks, 9,400, 5,600, 9,600, 7,800, 18 grand. Here come Gigi's trades, lose 52, but look, win 11, win 21. She only called 3 trades that week. Look, on 3 trades, she won 33 minus 5, 27. You would have made 27 grand just off of these 3 trades right here, 27 racks. But I'm gonna keep going. Look, win 981, win 68, 15, 4, and the list goes on. But this is what risk management You can end like this in 15 weeks from a $200 account. Ladies and gentlemen, this is the beauty of risk management. My name is Money Coach, and I just want to help you become the best risk management trader.
Okay, keep your screen right there. We're gonna show people something. Okay, let's just act like we trade in FTMO when you go take 10 trades this week. Now those 10 trades could be you got in EU, got kicked out and got back in. That don't mean you just trading all the time. Okay, let's just say you only win 50% of your trades. So you got winners over here, losers over here. Okay, so if you lose 5 at 1% and you win 5 at 1%, I said that backwards. So you break even for the week. But let's say you start working on your trading and you win 5 at 2% and lose 5 at 1. You're up 5% for the week. So being a 50-50 trader with a risk to reward of 1 to 2, it would only take you 2 weeks to pass FTMO. Now let's say you start getting those tight stop losses and now you're winning 4 times. Let's just say for every 20 pips, you're making 100. Okay, so 4 times 5, you won 20%, but your losers still stay at 5%. Now you've made 15% for the week. So as your win ratio and your risk to reward goes up, you still never lose more than 5%. So now let's say like I've had a 66. I had a gold trade that my R&R was 1 to 66. Just imagine. I grew by 66% and only lost 5% on 5 trades, and I only had 1 winner. I'm still up 61% for the week because of that 1 trade. So you see how keeping your risk to 1%, that the more you start winning, the bigger your account gets. Okay, is that making sense to everybody?
Absolutely.
So if you only win half the time and you're still only risking 1% at the end of the week, you're never going to lose more than 5%. But when you become a 2% winner, you're winning 10%. When you become a 3% winner, you're winning, let's see, 15% for the week. 20% winner, and it goes up and up and up and up. The better you get with trading, you're never going to lose more than that 5%. But now you're winning 10, you're winning 20, you're winning 30, you're winning 40, you're winning 50. You're flipping accounts like crazy. It's all risk management and getting those good entries, okay? Because you see how over here, when we had tight stop losses, we had huge lot sizes and huge profits, but we never lost more than 1%.
Right.
Every time you pull the trigger, you already know what you're going to lose. Like people were talking about those mental stop losses. What if you get an emergency phone call? What if you get a wreck, a fender bender? What if the market takes a nosedive? And we've seen it do it. Okay, those mental stop losses, anything in life can happen. Your account can get blown in a matter of minutes. And then you might be one of those people who pray to the Forex gods. Oh, Lord God, I'm in $100 drawdown, but I'm gonna wait. Dear Lord, turn it around. If it gets to 150, I'm gonna turn it. Well, it's going down 150. It's gonna turn around any minute now. Oh my God, I'm down to 200. I ain't closing 200. I should have closed it at 100. Ain't no way I'm giving 200 back. I'm gonna wait for it to come back up. The next thing you know, your account's gone. Anybody using a mental stop loss, they better have the mind of Gandhi or somebody, because I don't know anybody that will just willfully give away money like that. Like they're going to keep letting that drawdown go down and down and down and down, and they're going to pray to the Forex god that doesn't exist. So when you put that stop loss, and another thing about tight stop losses, you can lose 3 times in a row and win on that 4th one. And because your lot size is so much bigger than people with a big stop loss, on this 4th trade, you're going to make this back plus more. When you got that tight stop loss, you're getting in here, and you got this little tight stop loss. They got this big stop loss, and they're getting in up here. By the time you get up here, you're taking partials. They're getting in. They're just getting to break even. You're cashing out money, and they're just now starting to see blue. They've been in drawdown for 30, 40, 50 pips, but you got in at 10 pips, and you've already got a 4% ROI in taking partials before they even see blue. That's why all of this is really important, guys. That's why we teach getting those good entries. We teach not gambling. And again, let's just say you get in down here and you got a 10 pip stop loss, but you got a 50 pip take profit. If you lose 3 of them, you've lost 30 pips. You're going to come up and get 50. You're still going to be up 20 pips. Okay. Or you get that 100 pip moves. Now you're going to be up 80 pips. But this person risked 50 to make 50. If they lose 3 trades like that, they've lost 150 pips, but you still only lost 30 and made the same amount of money. I mean, the same amount of pips, but way more money. So hopefully all of that makes sense. So do we have any questions before we call it a night?
Yes. This is Carlisle again. Yeah, I understand the concept of the tight stop losses. It's just that I guess I'm just trying to understand how you when you getting into a trade. Okay, you're looking at the charts. So how are you calculating stop losses versus the take profit?
So let me share my screen real quick. Are you through, Coach Chris?
Absolutely.
Okay. All right. Trying to see where my screen. Oh, let me show you guys. This right here, this was risk management at 1%. And the beauty of this is it's an auto trader with 100% hands-free. So our auto trader has 1% risk management calculated in. But anyway, we even train our robots to stick to risk management. Okay. And I've also created a trading assistant that if you put like a 0.01 trade on your cell phone and you enter your stop loss, it will go to your account. And if your account's $300, it will calculate the proper
stop loss.
Okay.
Okay.
So it takes the thinking out of it. So I'm trying to tie 1% risk management in with our automation. So like it doesn't take your trades for you, but let's just say you're at the grocery store and somebody calls a trade. You can press a 0.01 on your phone. It's going to look at your account. It's going to say, well, he's got $300. The stop loss is 30 pips. So I'm going to take the trade at 0.03 and it's going to trail your stop loss, do your take profits and all of that stuff. So we're real big on risk management around here. Okay. So now repeat your question again while we're looking at the chart.
Okay. So, all right. So my question was, even by looking at the chart, how are you calculating your stop loss versus your take profit?
Okay. I wait till price comes into a dynamic zone where my POI is. Okay. If this is like a 4-hour POI, I'll wait until I get that break and retest on a smaller time frame, and I'll get my entry. Okay, let's just say this is my next 4-hour zone up here. Let's say I'm buying. Looking left on my lower time frame, like a 1 hour or 15 minute, I'll have those dots we were talking about, those pockets of liquidity. So I'll look for that liquidity the market is searching for, because I know the market is going to go to the next liquidity zone. So I'll have like a TP 1, 2, 3, and final. All right, my stop loss is going to go right. So if I had a break and a retest and I'm trading off this order block, my stop loss is going to go right below that order block. If my spread is 2 pips, I'm going to put it at least 2 or 3 pips below that order block. Okay. Because you want to calculate for that spread. Like up here, if I were selling, I would put it right 2 pips above that order block if my spread was 2 pips. So you look at your higher time frame zones for
Don't come out the room. Don't tell them.
Hold on 1 second.
Hello?
Let me mute everybody.
Don't come out the room, y'all.
All right, let me just mute everybody. All right. So you look at your higher time frame zones for where you're going to get in. You look at your lower time frame zones to pull the trigger, then you look back again at your higher time frame zones for where you're going to get out. So like if I am on a daily uptrend, let me take some of this stuff off here. let's look at all USD, for example. You have to excuse me, my granddaughter's in here. Let's see if this is an example. Like I said, I teach a lot. So you'll see a lot of stuff on my charts. This is not what my charts look like when I trade. Okay. Hold on 1 second. Let me mute that music. All right, since we're recording, I asked my beautiful granddaughter to mute for just a second. All right, so just like up here, this is my daily zone. All right, this was the last place the daily had a break of structure and a retest. So this is my last push. So I know if I catch my trade on the daily from up here, I can swing it all the way down. And it would be the same thing on a 4 hour. So if I had a 4 hour zone here and a 4 hour zone here, and this is where the liquidity was at, I would, if I got in at the top, I would try and trade it all the way back down for it to grab that liquidity, for it to continue trading up. So you go to your higher time frames, find your POIs and your liquidity, go to your lower time frames and get your entry. So you get in at higher time frame zones, you get out at higher time frame zones, you enter on lower time frame confirmations. Okay.
I understand
Makes
that.
sense.
So go ahead.
Okay, I have a question too. When you drop down to the lower time frame after you got, your order block on the higher time frame, and you refine it down to the lower time frame, do you, like when you take partials, do you take partials at you based off your stop loss? So if you got like a 15 pip stop loss, do you take partials at 15 pips, or do you take it 25%?
A lot of that stuff is preference, but I take it at important POIs. Okay.
Okay.
So see, here's an example where you had an order block, but you also had that imbalance. So when I mark that order block, I also mark my imbalance, which is here and here. And a lot of times you will see the 50% of the imbalance get tapped into. You see how I just tapped right into your imbalance right there. All right. Yeah. So let me take this off. And let's see what happened on the lower time frame. All right, so we had an ascending channel, which we know is a reversal pattern. You had a break and a retest. I would have entered like right in here. So I just wait. If I don't take it automatically off that zone, if that zone is tight enough, I can take it off that zone. But you see how it came in there? There was only 13 pips on that daily zone. Okay.
Okay.
So here's a lower time frame breaking retest, probably on like a 5 minute or 1 minute. If I can get back to it there. So yep, there you go. On your 1 minute, you had a break and retest. So if you have a higher time frame POI, and you see right here, you had a break and a retest on your 1 minute. Now you could have entered here with like, that's 2.5 pips, 3 pips. So 5 pips max, you could enter to catch that whole daily move.
Okay.
That makes sense.
Yes, and one more question. I'm sorry. And do you take like what 25% off, 50% off, or do you? And then do you put it to break even, or do you just, how do you do that?
And that went 130 something pips off of a 5 pip stop loss. So what you do is, like when you're selling, after you get this break of structure, my mouse is tripping. Hold on just 1 second. Okay, this is like a 5 minute break of structure. Now we're back on a higher time frame.
Okay.
Break of structure, you can shave partials. You can get another entry because now you got another entry confirmation. Goes to your higher time frame. It's probably like a 1 hour or 15 minute. Now, once you've passed this 15 minute POI or this 5 minute POI, you can shave off partials. But now you got like a 1 hour confirmation. When it comes back in here, you can get another entry and trade it down. So it's just all personal preference. Some people only like 25, 30 pip moves. Me, I like those, like 100 pips is a scalp to me. I've always said that. If it ain't gonna move at least 200 pips, I don't even pull the trigger.
Oh, okay.
Like when I took that gold on the 1 minute the other day, I knew I was gonna get 100 pips based on it trading back to the top to grab that liquidity. I ended up getting over 100 pips, but I knew I could get a 1 minute entry and get a 100 pip move, and then I could get like a 5 pip stop loss. So who wouldn't take 5 pips to get 100 pips? So I watched price break structure. I watched it come back and grab the liquidity, and I pulled the trigger and I dropped to the team. I said, hey, I just took this 1 minute entry. Let's see if it holds, you know, and it held and I made my money. But, you know, if I lost anything, it wouldn't have been much. But look at what I won. So does that answer your question?
Oh,
Hey, Gigi, let me
oh,
answer.
sorry. Yeah, thank you.
Let me answer a question by a young lady who sent me the question. The question was, you only have $200 account, all right? And Gigi, let me share my screen. All right, let me share my screen. All right, if you have a $200 account, and everybody put in the chat, what is 1% of 200? Move the decimal place
It's
to the
two,
left.
two.
Drop it in the chat. Drop it in the chat. I want to see the people. What is it? There it is, $2. So 1% divided by our stop loss, which is 45, is 0.04. If we move the decimal place to the left once, what do you see? 0.00. The lowest stop loss you can use is a 0.01. So just by default, if your stop loss, when you're doing your calculations and you see it's like this, you might as well just put 0.01 because that's the lowest you can go. Does that answer everybody's question?
Yeah, I understand that. Mm-hmm.
Okay, did anybody else have a question? Because I see some people sending me some direct messages, but I can't find them because all of the stuff is going away. It's up in the chats. So if you have a question, open your mic and ask me the question. Anybody.
I have a quick question with the numbers that you were showing with the weekly trades.
Okay.
That's taken into account that no withdrawals are done at the end of the week, correct?
Yeah, the whole purpose of it, we wanted to see how much we could actually grow our account with a $200 account, taking every trade that was called openly to everybody that was on this particular platform. And if you want to know the platform, you get with Gigi and she can, she's shared all of her information. You want to see because they have signals, they do all of that. And so we just took all of the trades that were given out to everybody who subscribed to the various, signals on their platform. And we said, hey, if we took every trade that was called for this week on everybody who had those subscriptions, let's see how much money we'd make. And as we said, hey, we're going to start this account with $200. And I intentionally did that because $200 is nothing to everybody. Everybody here on this, under the sound of my voice, even if you don't have $200, you probably could find somebody that would loan it to you. $200 is not a big investment. And we're sitting on that money and actually using risk management on trades that are given to you. Not even you doing your own trades. You just taking the signals. That's just taking winners and losers, because that's the only way you do it. You can't pick and choose especially when you're using risk management and you're talking about signals. You have to take every signal. That's the only way you will win. Because if you let's just say you lose, if they call 10 and they lose 6 and win 4, and let's just say you by chance picked all the losers, but I picked all the winners. I only took 4, but I picked the winners. You took 6, I took 4, but I just picked winners. Everybody's got to take all of them in order for this to work. That's how that happened. That's why you have to take every trade, because if not, you may pick the losers. You could pick the winners, but you could pick the losers. So how I make sure I get I'm going to maximize the money I can take. I will make sure I take every trade that is caught on this particular platform that I have access to. I'm going to use risk management, and I'm going to grow my account by Amazing percentages with nothing but risk management. We're looking at profits of 158%, and FTMO is saying if you can just make 10, we'll let you keep 70%, and at some point 80% of the money. I mean, it's not rocket science, it's just math and discipline. That's it. And being connected to the right people at the right time. And all while you're doing that, our advice is learn the skill to do it without signals. Get on those charts, find the importance of finding those zones, the order blocks, how to understand where you are with the higher time frames, how to navigate through where price is through the time frames, from the higher to the lower. We all should be aspiring to be a GG. Now, drop that in the trade. I want to be like Gigi, because she the one winning. That's who we want to be like. I'm trying to be like Gigi. Gigi is amazing. She can do this. She the one giving the signals. That's who we want to be. We want to be the signal. That's why her if you look at her brand, I am the signal. Drop that in the chat. I am the signal. That's what this is all about. I am the signal. This is what Forex and Chill was created for, to help the people. And we're here helping the people. She not charging y'all a dime. Ain't nobody asking for her. She ain't even put her Cash App on there. Y'all should be begging her for her Cash App and sending her $20. Just say thank you. It's crazy. This chick is she's showing y'all billions of dollars on the table and how to keep it with risk management. All the way live.
They can pay me back by putting this into use, like, and stop blowing accounts.
Exactly. Much love, G. I'm gonna log off, but we'll talk later. Man, child, dude, all of my people, everybody under the sound of my voice, I consider you friend. I appreciate you guys, just like you appreciate me. All right. Show your love to Justin, and Justin is the reason why I'm here. So always shout Justin out. Child, I love you. Grant, all my people, Neil, the people I know on a first name basis. Man, get to know me, I get to know you. All right. I'll talk to you guys later. Peace.
Guys, honestly, we've seen people take small accounts and grow them like this, and it was all in risk management and trade management. Justin Dudley and I were just talking about somebody today who did some phenomenal things trading like this. And once you get those tight stop losses, once you get that right mindset, you stop gambling, you actually become an investor. See, a lot of traders have a gambler mindset. When you start looking at, and that's why we don't talk like, oh, I made $2,000 today. Our team says, oh, I had 10% ROI today. We speak and think like investors, because those are the Elon Musk, okay? Those are the people who are growing by millions and billions every year, because they don't look at how much money they can make. They look at how they can grow their initial investment. So I challenge each of you to start thinking in terms of ROI, because you see, just like FTMO, they're like, grow this account by 10%. 10% is 10%, whether it's their $10,000 account, whether it's their $50,000 account, whether it's their $100,000 or $200,000 account. When they say you can't lose but 5% or 10%, they don't talk in dollars, they talk in percentages and ROIs, because that's the mindset of a true investor. So once you develop and grow that mindset of a true investor, you will become less attached to the money and to the hype and to all this flashy stuff. The most profitable traders I know, they ain't out there putting nothing on social media. Trust me. I know some big time traders, and they ain't showing withdrawals. They ain't showing screenshots. They ain't showing nothing. Like the true wealthy people, they're not making money off teaching other people to trade. They're not making money off getting brokers fees or sponsorships or social media. They're out there in the trenches, and you don't even know they trade. Like these people that we're impressed by, sometimes they're making money off educational courses. They're making money off broker fees, and going out there paying for a lot of this stuff, it ain't often withdrawals all the time. That's all I'm gonna say about that. So we're gonna call it a night. What I'll do is I'll upload this to YouTube as unlisted. Wherever you saw the link, you can come back and we'll drop the YouTube, the link in there so you guys can get it for the replay. So like if you saw it in my Telegram, if you saw it in somebody else's Telegram, we'll drop the link so you can reach out to me. I'll give you the link. It'll be unlisted on YouTube, where the only people who will see it are the people who come back and snatch the link, but we will drop it to all of you.
Yeah, Gigi, I wanted to
Excuse me
say
for
that
watching, but
I appreciate you, and I introduced some people to you tonight. And is there a way for them to reach out to you or get a part of your group, or could you list how to get in contact with you?
I just put I'm gonna share my screen and get the Telegram. I'll leave it in there too. Hold on. Excuse me, y'all. I'm munching popcorn with the grandbaby now. We're having grandma and granddaughter movie night. So let's see. I hope you guys learned something tonight. Because ForexNChill started out by, I was infatuated with charting. Like I spent all my weekends and all my time charting and studying. And so on Friday nights, I would tell my friends, I'm like, hey guys, let's jump on these charts tonight. And we ended up starting out like 3, 4, 5 people jumping up on Friday nights, and we would chart from like 9 o'clock at night to 2 and 3 o'clock in the morning. And the next thing you know, it went from being like 3, 4, 5 people to being hundreds of people getting on Friday nights. And one thing, to teach once is to learn twice. To teach once is to learn twice. If you can get on and chart with other people, it will help you grow. And even if you're charting, like when we have charting sessions with the team, I tell them, don't chart unless you speak me through everything you're doing. I need to hear you say it out loud. I need to know your thought process, because you know how a psychiatrist has you to talk to yourself, and a lot of times you figure out your problems by hearing yourself talk. If you would talk yourself through these charts, a lot of times you will start seeing stuff that you missed before, just like that movie that you rewatch 2 or 3 times and you always pick up something new. It's the same thing with these charts. That reticular activating system, the more you chart and the more you see it, before you know it, you're going to understand the language of the charts. Okay. Did I drop the Telegram in there? Yep. And there's the Telegram for anybody who wants to join. All right, guys, we really enjoyed having you on here tonight. I hope you learned something, and I hope you apply it to your trading career, because this can definitely be a career. Forex has traded me. I used to work overseas, 6 figures tax-free, and I was able to come home. Thank God for Forex. So y'all have a great night. We appreciate you, and we will see you in the chats and on the charts.